Well, moving on, the Central Bank of Kenya is in the market selling treasury bonds to offer budgetary support. The bank will be selling a 2-year bond as well as reopening a 10-year bond seeking to raise up to 25 billion shillings. The 10-year bond coupon rate has been pegged at 12.371%, while the 2-year bond will be market determined. The government usually borrows domestically through sale of treasury bills and bonds to finance long-term projects and service short-term obligations such as paying public sector employees. The sale of the 2 bonds comes less than a month after the central bank reopened the 2 treasury bonds for sale, seeking to tap up to 20 billion shillings in the auction, also meant for budgetary support. And now to some interesting development in the line of oil and gas. The skills gap in the oil and exploration has created a huge challenge for firms in the industry. From lack of skilled welders to rig operators, oil exploration in the country has created the need to better equip people to work in the industry. And now the National Oil has partnered with Strathmore University to develop a curriculum to improve on the size and quality of labor available for the nascent industry.
Kenya's quest to explore oil in northern Kenya has not been without its fair share of challenges. Oil exploration companies operating in the country have had to hire foreign skilled labor in bulk, owing to the wide skills gap in such a dangerous but highly lucrative field. Research commissioned by Africa Oil and Landing Foundation on skills and training needs for Kenya's emerging upstream oil and gas sector established that between 6,000 to 15,000 jobs will be created in the next 10 years in this industry. To this end, having the right skills for the job will be crucial, creating the need for specialized training. Collaboration between industry and educational institutions towards developing a market-driven curricula is one of the steps that need to be taken now towards developing human capital in this nascent industry. One of such partnerships has been sealed today between the National Oil Corporation and Strathmore University.
This will see us offering executive short courses in oil and gas. The focus of this particular collaboration with Strathmore is on the top and mid-tier executives, both within the public and private sectors.
This Center of Extractive Industries brings together national and international capacity, blends them, and trains people so as to improve the local content.
At the moment, industry stakeholders are at work developing statistics on the available workforce, but the numbers are said to be marginal.
We are at the beginning of a process of mapping what are the detailed human resource needs that will be required, both over development and production, and then map that against local capacity, including capacity of the universities to produce those.
The need to develop a pool of skilled workforce comes at a time when the economy expects to gain close to 1 trillion shillings from the Turkana oil basin within a production period of 30 years. It is also estimated that investments worth 9.9 billion shillings will trickle into the economy within a period of 8 years as prospecting companies continue to pump in more investment. This has, however, been disrupted by the burst cycle in the global oil markets, bringing lower yields for oil-producing countries. Charles Gitonga, KTN Business.